Welcome to the ARMR Report, ladies and gentlemen. Thanks for joining me on the stock market wrap-up with the ARMR Report. I'm Brett Rosenthal, the creator of the ARMR Report, both this YouTube channel and the website, thearmorreport.com. The ARMR Report I created really for individual investors deciding to manage their own capital, which I respect. But I think over time you recognize it's a monumental task. Okay? And so if you value information and you're interested in learning the process of how to create that information, then you've come to the right place. At the end of the day, information makes money and institutions make markets, and we're going to talk about that today with a direct example of what's happening in the cannabis space. So we're going to go over the cannabis space. We're going to talk about stock market real quick, just some directional thoughts from today. And I'm going to share with you step by step the ARMR day trading way where we use volume weighted average pricing. If you're not using the VWAP and you're out there trying to understand the market on an intraday basis, you are doing yourself a disservice. So I'm going to share with you how we use this to both day trade and position stocks for the portfolio. Okay, so before I dive in, don't forget, guys, I don't know you. I can't possibly give you information from the standpoint of advice on your portfolio. I can share information that I'm using in my own portfolio that I use to build my own net worth. That's what I can share with you. But telling you what stocks to buy and when, can't do that on YouTube. If you want a deeper dive into what we're doing here, consider becoming an ARMR Insider. Right down here, you can click on the link and consider subscribing to what we do. And at the top of the list of what we do as an ARMR Insider is you have the right to get on the phone, call me up, and chat with me. But also you can be part of the ARMR Day Trading Room. It's a Slack room where we're all sharing information and ideas. And I'm going to show you a chart today that we all own in ARMR portfolios. I own ARMR portfolios, put it that way. Don't forget the ARMR portfolios are a reflection of my personal assets. All right, so I'm not telling you what stocks to buy. I'm just sharing where I'm at. But I'm going to share with you a chart pattern of an idea that's in my own portfolio because an ARMR Insider pounded the table on it. So what I like to say is we are an army of analysts backed up by a tank division of algorithms, right? And that's the information edge we're creating. So the ARMR investing way breaks down into 3 stages. Build our whiteboard, use algorithms for execution, use stop losses to protect capital. And that 3-stage approach is how we manage capital, and I'm trying to share that process with you. So let's dive in real quick, look at a chart pattern of the, oh wait, don't forget, if you like this, give me a thumbs up. That always helps. I appreciate it. Take that off the screen. You can subscribe down here to this channel or the ARMR Report website by clicking those links. All right. I will get to questions and answers, so just fill up that chat board if you want me to at the end. I'm going to try to cut this down. I always find myself talking a long time, so let's just try to get to the issues, and then I'll get to questions, all right? So just looking at the S&P, I always like to start there. It looks great. Nothing wrong with that. Had a great week last week. A little bit of weakness this morning. Anybody who knows me knows that I absolutely hate gap up Mondays. But boy, do I love gap down Mondays because they set up the opportunity for great day trades, number one. Number two, and maybe even more importantly, gap down Mondays shake the tree. And by the end of the week, you could take out those highs, make new highs, and you have a nice candle for the end of the week. So that's what we're hoping to see. Let's dive in by talking about, I'm going to get to Cannabis Couch last. Let's focus on that right before we get to Q&A. But I just want to share with you how we put capital to work here at the ARMR Report. So we see a gap down Monday morning, which we absolutely love. This is the day trading chart of the S&P. So it's a 3-minute chart. Each bar is 3 minutes. The blue bars are obviously positive. Magenta bars, negative bars. You're looking at the ARMR algorithm, which we call the price movement profiler, or the PMP. Okay? the most important part of the black dots, that's the volume weighted average price. Now it's an ARMR VWAP, okay? So this is an ARMR algorithm. Everything we're using here is off the shelf, indicators that we then infuse with volatility to come up with our own interpretation. So, if you're using TradeStation, if you use VWAP, or if you use Fibonacci extensions, they're going to look different than what you're seeing right here because it's a proprietary algo. But at the very least, if you begin using VWAPs and standard deviations above and below and Fibonacci extensions above and below, you're going to improve your trading success. Oh, hey, don't forget, I'm going to share with you a bonus idea about using standard deviations for targeted exits to manage your risk. And we're going to look at Riot and MicroStrategy because it so perfectly proves the point today. Okay, so I'm going to show you that too. But let's just rip through real quick a couple of trades from today. So what we do in the morning at the ARMR Report is I start sharing my screen at 9:20 and I show you guys what we're looking for on the indexes and what stocks we're looking to trade this morning. So this morning, what I like to trade are stocks that I have an interest in owning in a portfolio. So if I get the trade right, I may end up holding them overnight. Okay, so let's just look at a couple trades. First of all, NNDM. I've been trading this on and off in the trading room. I'm not holding this overnight, but it's just a classic entry point. So here's how we do it. Ready? Grab a pen and a piece of paper, jot this down so you can mock up your own portfolios and whatever trading strategies you're using. Here's the volume weighted average price, the black dots. This line right here is the demarcation point from Friday's close to today's open. Okay? So what we're looking for is the asset to trade above the prior volume weighted average price and the top day VWAP, which happened, as you can see, the very second bar of trading this morning. All right, you put your position on right there at the end of the second bar of trading, which is 936. We use the low of the bar we bought as our stop. Please notice how none of these trades even come close to that. So I'm going to share with you 5 out of 5 trades today that made us money. We made money on all 5 trades. Does that happen all the time? No, of course not. There are going to be some days you run into a brick wall. That's why the low of the bar you're buying is such an important stop. It keeps your losses small, but on days like today, you can capture the upside, and it's significant. The upside is going to be multiples of what the loss is. Just look at the trades, okay? Low of the bar we bought. Doesn't even come close. Things skyrockets. Typically what I'll do, and this is just my strategy I'm sharing with you, I'll book 25% of the profits at the average true range high of the day, ATR high of the day, and then I'll look to book the rest on a 3-bar reversal move back below the ATR high of the day. Sometimes I book 25% there, so I'm out of 50%. And the 3-bar reversal is right here. Okay? This is the 3-bar reversal. Pretty obvious. Okay? Boom, the trade just ended right there. Notice how it never goes above the high of that bar, those 3 bars. Okay? And what I would sometimes do is trail the rest of my trade right below VWAP, and it would have taken me out here. And at the very least, it would have taken me out right there, because sometimes I wait for the end of the bar. But on an asset trading this aggressively, I probably would have taken me out here. Okay? Next trade. These are not the trades we're holding overnight, but I'm just showing you how this works. This is CHGG. And I posted this on Twitter. If you're not following me, consider following me on Twitter. It's at Brett Rosenthal, B-R-E-T Rosenthal, right? So number 1. This green box shows you the prior day's VWAP. We closed above it on Friday. So it sells off right to test that VWAP. The volume weighted average price is where institutions are accumulating the stock. That's why it's important. All right. So then what we do is step 2, we buy the first close above prior VWAP and top day VWAP. And this occurs at 9:45. Notice how it never challenges the stop. It rips right up to the ATR high of the day, which is right here, and it takes a break. We book some profits there. It runs higher, and really the 3-bar reversals right here. Okay, and so the trade's over for me right there. And it never really gets above that high. It ends up trading lower. Okay. Now let's take a look at 3 stocks that made it into the portfolio. But we're going to take a look at just the day trading angle, okay? So we're not going to talk about where it closed. We're talking about day trading right now. This is a much more aggressive trade, but it makes us money, right? It closed a little bit above its VWAP, NVIDIA, and gapped up the next morning. We end up buying the 939 bar as it closes above top day VWAP, okay? Notice how it does not even challenge the low of that bar. It goes straight up, makes a double top. We're raising our stops at some point and booking a profit in here. Not everything skyrockets, right? So when you extend a certain amount, you need to raise your stop. In this case, please notice how the ATRs, and this is an ARMR ATR, so it's not going to be the same as what you're using. We use multi-day and top-day volatility to determine the average true range. Notice how the NVIDIA is pinned right at the ATR. It looked like right in here we had a double bottom at the VWAP and it was going to go. Then the market sold off in the afternoon. And of course, it's a big market stock, so it just comes right back to the ATR. So the average true range high ends up being where the stock closes the day. All right, let's look at Etsy. What a great trade this was. Holy smokes. This was a trifecta. Okay, so Etsy closes at VWAP the prior day, which is Friday. Gaps below it. Then what we have is a 3-bar reversal, which we absolutely love 3-bar reversals for booking profits on the long side when it goes down and putting positions on the upside when it goes up. That 3-bar reversal, or a 3 white soldiers if you're a candlestick charter, is a powerful pattern, particularly when we see the asset go above the prior day's VWAP, the top day VWAP, the ARMR moving average, and if you're a gamma player, you would recognize that 175 was the key gamma level on Etsy. So when it clears all of that at once, the thing reverses and skyrockets. Okay? And it really doesn't put in a 3-bar reversal. I'm going to have to say the real 3-bar reversal to me is here. Okay? It's not really here. This is 2 bars and then a tiny little bar that's inside that bar. So it's going to be here. Okay? And then the last thing we'll look at today is TXG. Notice these trades never challenge the low of the bar we bought. All right? Top day VWAP, it's above it. What does it do? TXG sells right off to test the VWAP of Friday. I mean, literally, the opening range low equals the VWAP. This is like, you know, there's a baby somewhere crying because his bowl of candy's empty. You know what I'm saying? And it closes above top day VWAP right there. That was 954 bar. Makes us wait a half an hour. And then guess what? 160 was the gamma level that was important. So when we closed above 160, you know, we're long right here. You get long again right there on that bar at 1030, and the thing just skyrocketed. Right? And then you exit wherever you want. And when you get a skyrocket like this, sometimes I use the first standard deviation above the VWAP to stop part of the position. Maybe I would sell 25% there, comes back down, holds the VWAP. Maybe you're holding it all day. Never really puts in a 3-bar reversal. But notice how it comes right back down and tests the ATR. Holds it and then drifts higher the rest of the day. All right, so those are some examples. Now let's talk about how we would use. This is a little bit different, guys. So let's talk for a second. All right. Now I want to share with you a daily chart pattern. And this is a tool I use to help me book profits on the way up. So if I was an investor in Riot and MicroStrategy, which I'm not, I'm just sharing with you an example of how standard deviations can be so important when it comes to managing risk. We're going to use these two examples to look at. This is just a teaching episode. All right, this is not me talking about what we own here. All right, but let's look at Riot. Okay, what we've got here is a standard deviation band around the 200-day moving average. The 200-day moving average is this black line right here. It's the standard 200-day. This is 5 standard deviations above the 200-day. I'm using Bollinger Bands, but I don't use them for the purpose of the way Bollinger suggests you use them. This is just simply for me to look at different standard deviations above the 200-day on TradeStation. Okay? Notice how every time Riot touches that 5 standard deviation line, the trade is over for a short period of time. Touches it here, goes down for a couple days. Here, intraday sell-off, right? Goes again. Now here, we saw it break above on Friday, the 5th standard deviation, and is it any surprise it's down big today? What I'm suggesting is sometimes when you see an asset blow out above the 5th standard deviation line, if you're a swing trader, not even blow out, if it touches that line, sometimes I use that as a place to book a profit. Okay? And look at MicroStrategy, MSTR. Well, MSTR is even more obvious. 5th standard deviation here. Okay, it gapped up again, but that was the end, right? And it consolidated for almost a month in that range. Then it blew out again, touches the 5th standard deviation line one day, this morning touched, and then boom, just straight down. All right, so that's just a thought for you guys. If you're not using standard deviations above the 200-day, you're doing yourself a disservice. It just helps you understand how far away you are from reality. Now, here's the key. Some stocks are different than others. So 5 standard deviations for MicroStrategy works. You know, Apple might be just 3 standard deviations. Okay, so the volatility of the asset, you have to go back and look over the last couple of years and say, based on the volatility of this asset, what makes sense? And of course, you overweight the last 6 months because what's it doing now and what makes sense? And you'll be able to see it. Your eyeball will just pick it out. So, 5 standard deviations, no brainer. 3 standard deviations. Usually I use 4 standard deviations. That's normally the level that I use for most stocks. Okay? All right. Cannabis couch and then questions real quick. What are we doing in the cannabis space? Well, this was our game plan, and we're executing the game plan. We went into the vote. With 50% of our exposure. However much we wanted to have total in a portfolio, we had half. Okay? And honestly, we put that half on before even the original election. So we had big profits going into that runoff vote last week. And we said, okay, let's see where we are after the vote. So the vote goes Democrat. It's a gap up. We immediately increase our position size X percent. I'm going to not tell you what percent because I'm not telling you how to run your own money. I'm just telling you what I did with my money, right? So I recognize, and let's look at the chart pattern of MSOS. Okay? So just so you're aware of where we are from a Rosenthal, my personal portfolio, but ARMR portfolios, okay? So originally we added MSOS to the portfolio here. And if you all follow me on, Twitter, or if you watch this YouTube video, you can go look at it. I have a playlist set up for you about cannabis. I explained to you back then why we thought MSOS was the best way to play the U.S. cannabis space. And what I said was, number one, I like the management team. The guys who are running this portfolio, I think, are really smart. And investing's about, really, at the end of the day, if you ask me over 30 years, where did I make most of my money as an investor? I'd have to say I made it investing in the right people. and the products and the services came second. I can't tell you how many companies who traipsed through our office, sat in our conference room, and told us about the greatest widget or the greatest, service of all time, and we never heard from those stocks or companies again. And it was because the management team was terrible, right? And the flip side is, I've seen mediocre ideas skyrocket because the management team is brilliant. In this case, we have an awesome idea with brilliant management. It doesn't get better than that. So I put money with those people. Okay? That's one reason. Another reason is I like the liquidity. We're at the early stages of what I believe to be a massive move. Probably, I've said this many times. I think this is going to be one of the greatest investment opportunities in my life. And I lived through the internet boom. Okay? So it's not hyperbole, but then again, I've been saying that for 3 years. So it doesn't mean I won't book profits. It doesn't mean I won't stop a loss. Okay, this whole thing could reverse in the next 24, 48 hours, and I'll be lifting positions out of the portfolio. Okay, so let's all make sure we understand that. The ARMR investing way breaks down into 3 stages. The third being stop-loss disciplines to save me from myself. Okay? Now, having said that, investors have to avoid the pitfall of being early on a situation and getting off that train too soon. You make the first triple and you miss the next 10 bagger because you can't fathom how right you were. It's a real problem for the investor psyche. I've seen people ride stocks all the way to zero, because they're long-term holders and they're going to wait for this thing to, go up because they're sure they're right. So they don't mind losing money. But once they start making money, they can't stand it. They can't stand success. And they end up booking profits way too soon. And I still do that. I still make those mistakes. We all do. We just have to limit those mistakes. All right? So MSOS, my favorite way to play it, because at this stage, there's a land rush on. There is massive amounts of capital trying to get into the space. I don't need to be clever and pick out the 1 or 2 names that are going to outperform their peers at this stage in the game. What I need to do is own a basket of all the names, because what you've got is a funnel like this, okay? And there's more and more money trying to get into a finite amount of names. So everything is starting to go like this. So at this stage of discovery, which is what it is for cannabis. I mean, you and I discovered it years ago. But there's a whole new set of capital discovering it now because they're saying, hey, man, the government's going to change the rules. I got to get involved. Those people wouldn't get involved a week and a half ago or a week ago, whatever it was. So now they want to get involved. So it's new to them. So when you get that type of capital rush, the best thing to do is to go with, in my personal opinion, the most liquid asset that gives me complete coverage. What I don't want to do is start picking and choosing what I think is the best. That's the worst situation when you end up picking the wrong names. The whole group goes through the roof and you're sucking wind on something. Now, later in the cycle, what we'll do is put profits off the top on these indexes and rotate into maybe what we think from an alpha standpoint can outperform its peers. But my suggestion right now for me, for my capital, is I don't need to do that right now. I just need to invest with the right people who know where to go and build a portfolio, and that's what MSOS is for me. Now, so what I said was, the day of the announcement, we increased our portfolio position in MSOS. And what I said was, I'm waiting for day 3 or 4. Really, tomorrow I thought they'd break out, but today they clearly did. Whatever day closes above the high of the gap up day, I want to increase my position a little bit more, which we just did. Now we're done adding to the position. Now we're done. We have our position size on completely. The low of this gap up bar has to be the stop point for all that excess. And if you're aggressively trading, it's the low of today where I would reduce exposure. If this thing reverses and implodes tomorrow, I might reduce the position I just put on. Okay? For an investing portfolio, it's the 25-day moving average. Now look at MJ. All right? I really like MJ. Did the same thing today, closed above the high of that bar. Now, I know some people think that why buy Canadian cannabis companies? This was a U.S. election. And I do respectfully think that they're missing the point. That thought may be correct 6 to 12 to 9 months and further on. But for right now, the election reshuffles the deck, brings in a lot of new investors. They don't necessarily understand the U.S. MSOs. They can't figure out how to buy the U.S. MSOs. They're not allowed to buy the U.S. MSOs, but they can buy Canopy Growth. They can buy Kronos. They can buy Village Farms. All of those Canadian companies have tentacles in the U.S. market already. Okay? So MJ is a good way to play that. And on top of it, it looks like the Canadian business continues to develop in a more advantageous way for those companies. Consolidation's going on in the space. Grow is going down. Demand is going up. Right? So I think it's just an easy way for capital to get into the space, and therefore I'm going to have an allocation to MJ. Okay? And so the way I view it is these two stocks are the cog in the wheel for me. And then I'm going to add spokes. So bigger position sizes are the cog, and then the spokes are smaller position sizes. You know? And as I do every day, I share with ARMR Insiders what we're adding to the portfolio and what we think the spokes are. You know, so we already have the top 4 US MSOs in the portfolio. You know, we bought them a long time ago. Anybody following me knows this. So, as an example, that would be a cog. I mean, I'm not buying them up here, right? But, we own Curaleaf down here, okay? We own TrueLeaf, Green Thumb down here, right? That was our entry point. So I'm not adding to this. But of course, when I'm adding MSOS, that's the cog, and they own all of these, okay? So anyway, those are my thoughts for today. I got to get out of here pretty quick, but I do have some time for some questions. So throw at me some questions. I'll get to them, and then I got to split, and I'll talk to you guys tomorrow. All right. Hey, Brett, do you like Mosaic as a food inflation play? I don't know. I have to look into it. Oh, yeah, the fertilizers. I'm not a buyer of the fertilizers right now. Let me say this. I got to give it to ID Doc. He's not here right now watching, but he made me look at these stocks. I just can't find room in the portfolio for them. But is this Mosaic MSO? Yeah, I mean, I don't know what's going on here in fertilizers, chemicals. I think Dow was breaking out the other day. Dow Chemicals breaking out. And so one of the ARMR Insiders asked us about, Exxon today and Chevron. They pay fat dividends. You can't argue with that double bottom there. These stocks probably go up. I just don't have any room for them in my portfolio. But if I was, building a very conservative dividend-paying portfolio, those names might make sense. All right, Festeroso, you sure cranking videos? I think, right, I am cranking videos out. I don't know why. I'm just having fun doing it. So I figure, what the heck, I'm sharing. I share all day long, I guess, videos with ARMR Insiders. And then I thought, what the heck, at the end of the day, I'd like to talk to all of you as well and share what I'm thinking. Hopefully it helps you guys, And it helps order my thinking. So thanks for joining. I don't know the Robinhood trading app, so I couldn't, advise you or talk about that at all. Butch, what's up, Brett? What do you think about the close of NASDAQ strong week? I mean, it traded around its opening range. It went down to its ATR low, its tight base. I don't take too much away from Monday mornings and Mondays at all. It's really Friday that matters to me. It's the weekly chart pattern on indexes. So I didn't see anything that would get me too concerned today. Market had a big up week last week, and it gave back a little bit this morning. That's kind of a healthy thing early in the week. I kind of don't like that late in the week. Illumina, algos, shoot first, ask questions later on that news. Yeah, I don't even know. I mean, look, Illumina is a great idea. I love Illumina. It's always at the top of my whiteboard. Who knows why they whacked the stock today. They were at a conference, right? And, whatever they said, market didn't like for a minute, broke it down. But really, if you just look at the stock, it's traded inside of this range. So it ran right up to the range and put it a hammer. So if you're a swing trader, you're probably out of that trade right there. If it takes out the high of these two bars, I might put the trade right back on if I was a swing trader, Do I see clarity in the market? You went to mostly cash. Let me tell you something, brother. I don't know what the market's going to do next. I just use algorithms to tell me when to commit capital and when to protect capital. Right now, the ARMR algos are 100% invested in the market indexes. So until I get stopped out, I keep rotating capital and putting money to work because you know what? I never feel good about it. It always feels like a terrible idea. There's always reasons why. I mean, you watch the news and you'd be crazy to buy the market right now. It looks like the whole world's coming to an end. But if I invested watching CNBC, watching Fox News, watching CNN, I'd lose money constantly. I used to watch CNBC all day. I don't know why anyone does that. I don't have any TV in my office. I don't care what other people say or what they think. All I want to do is execute an investing process over and over again when I'm putting myself on the right side of probability and the reward's worth the risk. That's it. And how do I judge reward and risk? It's not risk like, people are rioting in the Capitol and the president's, being suspended from Twitter or whatever. When I talk about reward and risk, I mean my entry point is close to my stop. Am I going to get a haircut if this thing reverses and implodes? Of course, right? I'll lose somewhere between 5 and 10% of my net worth off the top if the market imploded. Nothing I can do about that. If I waste time worrying about that, I don't capture nearly any of the, I won't capture any of the upside. 10% would be an extreme. Last year we got stopped out of the market February 24th. We didn't lose 10% off the top. And that was one of the worst collapses ever. So you have trailing stops, you raise those stops as it goes, and you let it keep going until you get stopped out, you go to cash, and you take a break. I will. A Leaf. Check out A Leaf. A Leaf Health. Cannabis oil capsules, sprays. It's a network of 25 medical clinics, education centers. All right, I'll take a look. It's too tiny for me to talk about on YouTube, though. All right, guys, listen, I really appreciate your time spent with me tonight. I look forward to talking to all the ARMR insiders 8:30 tomorrow morning for the morning call. You guys have a great night. I'll see you tomorrow. See you on the flip side, everybody.